Hi, and welcome to the Money Tips No One Told You podcast, presented by First Pioneers Federal Credit Union. Here at First Pioneers, we're passionate about helping not only our members, but our community become financially successful. That success often starts with basic knowledge, things like knowing how different account types work, to understanding terminology, or even tips that make your life easier. The more you know, the more success you will have as you handle your money and your finances. Let's get started. Hi, I'm Heather, Marketing Director at First Pioneers Federal Credit Union, and today we are once again celebrating youth as credit unions across the country celebrate Youth Month in April. Last time, we talked about basic lessons in money management for your kids. And in this episode, we want to discuss a few things your teens need to know as they begin this leg of their journey to adulthood. There's a bit more about money management, building credit, and what it really means to have a job. First, let's talk a little bit more about money management and spending habits. It's never too early to create a good money habit. When you think of your child, are they one that gets $10 and has to spend it right away? Or are they one that saves it up and purchases something bigger or maybe more expensive? Whether that's a more expensive game or something as big as a car. Well, no matter what their choice is as to how they spend that money, this is their money habit. And if you see them developing bad money habits, let's turn those into positive ones as early as we can. So what do I mean by habits? Well, teaching them to save and to live within their means and to stick to their budget, those are the good habits you want to instill. Now, most likely as your teen gets older, they will begin to have some bills they want to pay. Even if it's just one or two at first, like a cell phone bill or car insurance, it's important for them to understand how to manage their money to ensure that they handle their responsibilities and have some fun. You can start that with a quick breakdown of the difference in needs and wants. Needs are going to be things like water, food, a place to live, and transportation to work and school. And then wants, those will be things like maybe concert tickets or movie tickets, maybe a skateboard, or having coffee or eating out with friends. And as they reach young adult age and start to live on their own, this becomes imperative for them to know. When they budget, needs come first, then their wants. As they start to create a budget, if they're finding themselves a little short when it comes to their income, help them find creative ways to make things work. Maybe an extra side job here and there, or maybe showing them where they can cut some expenses. But showing them these things will help them understand how to adjust the budget and make it work. Let's be honest, sometimes it's hard to understand that even when you're spending small amounts, it adds up over time. I use what we call the latte factor as an example of what it's really costing them and how managing that spending better can make a big difference. And of course, the example's coffee. It seems like so many people just need their coffee every day, and not just coffee at the office, right? But the more expensive fun coffees. And I mean, a coffee run can easily be $5 at a time, or I guess even more now. But let's stick with $5 for this example. So let's say you buy coffee 5 days a week. That's now $25 a week of spending. Over a month, that's $100. Now, let's say your teen does this every school day. There's usually about 180 days in a school year. So if we take that $5 for each visit times 180 days, that's $900 a year. $900. I mean, just think what could be done with that much money. If I had to guess, probably quite a lot. So a suggestion might be only get coffee once a week. The rest of the time, bring coffee from home. Not only does this save money, but it makes that once a week coffee run a really special treat and something to look forward to. I've actually started doing this myself with my lunches. I had kind of gotten out of the habit of planning, and so I was finding myself eating out almost every day, and it was really starting to add up and hit my budget. So now I've started planning my lunches for the week again, and I only eat out once a week. And it's always actually a treat. I get to decide where I'm going to go this week, maybe even try a new place. And, it really makes a difference not only in spending, but how you think if you make it fun and positive versus something that you're taking away. I also recommend the think before you buy test. Ask these questions. Do I need this or do I want it? If I just want it, then why? Exactly what will this be used for? If it's a special occasion, can it be used again? Or is this a one-time purchase that will then just sit in my closet? Also, can I find it somewhere else for less? And the big one, what will I have to give up or put off if I purchase this now? Now, of course, there'll understandably be one-time things that you purchase in your life, like a prom dress and things like that. But other things, like just a new pair of shoes, may need to pass the ask test before you buy. Think of how often you'll wear them, how much use will you really get out of them before you buy. Decide what need they fill and if they're truly worth it. Now is actually a good time to remember our discussion last week about contentment and impulse buying. This falls very nicely into that same conversation. So again, managing their money to stay on budget and be able to save for goals and emergencies is a good habit to form. Now, we talk more in depth about savings and budgeting in other episodes, so if you need a bit more information on that, it might be helpful if you check those out. Now let's talk another big topic you need to discuss with your teens, and that's credit. I am finding that this is really a big one. I know, in fact, in my house, it's the thing my son seems to want to know the most about. So where do we start? Well, of course, we start with the basics. What is credit? Well, buying on credit simply means you're making a purchase with money you've borrowed with the promise to pay the money back. The principal is the amount the item cost or the amount that you borrowed, and the interest on a loan is basically the cost of borrowing the money. So you pay what you owe, or the principal, plus the interest. Using credit is generally necessary for big ticket items like cars or homes, but did you know there's more than one kind of credit? Ones that will involve paying interest on the loan are revolving credit, which is a credit card. And keep in mind, credit cards can be something like a Visa or MasterCard, or they can be from a store. For example, Best Buy offers credit cards, so does Lowe's, and really a lot of other big retailers. And just about every store you go in will offer you credit when you check out. So I'm going to say it again. Don't let your teens get into trouble by charging things they can't afford. Then you have installment loans, which are things like car loans or home mortgages. And we said both of these types have interest that you'll owe. And actually, the interest is going to vary for a lot of different reasons. So take credit cards, for instance. The interest on credit cards is frequently high and it's variable, which means it can change at any time, up or down. And when you're carrying large balances on credit cards, it can cost you huge interest payments with those high rates. Now, there may be occasions where credit card companies will offer special rates, but it's always a good idea to read the fine print. The interest rate can change, and there are always rules that apply. So help your kids understand to read and understand what agreement they're signing before they sign it. And again, warn them of the dangers of credit card debt. Interest on loans will depend on many factors as well. One big one is your credit score, which we're going to talk about in a minute, so hang tight. But help them check the rates and consider not only what they can afford in their budget, but what the purchase will cost them overall once the interest is factored in, because it will be more than the purchase price. Finishing out the types of credit. There's service credit, which is for things like a cell phone or electricity at an apartment or a home. Keep in mind, if your teen has no established credit, they may need to consider an option like a cosigner for contracts like that. So just kind of have that in mind as you go into that situation. And then the last type of credit is a cash loan. Those tend to be more of a personal transaction between friends or family versus something with a business. The truth is, there will be credit involved in so many parts of their lives, especially as they rent apartments and sign up for utilities and cell phones and things like that. And the question we hear a lot is, but I don't have credit. So what do I do? How do I start? And there are actually several options for that. Keep in mind, typically it takes about 2 years to get a good credit score established. So a great start would be a credit builder loan. In fact, First Pioneers offers credit builder loans, and so do a lot of banks and credit unions. The structure may vary a little bit, but they'll probably be pretty similar. And the structure for First Pioneers is a series of 4 loans. You start with a $250 loan over 6 months. Then you go up to $500 for 6 months. Then $750 for 12 months. And lastly, $1,000 for 12 months. And if you've maintained your payments and paid on time, you should have a reasonable credit score after the series is finished. You can also open a secured credit card or secured loan. These loans don't require any collateral and they're considered personal loans. So let's stop for a minute and talk collateral. Some loans require collateral. And what's the definition? It's an asset that a lender accepts as security for a loan. So for homes and cars, they are the collateral. But you can also do what's called a secure credit card. So with a secure credit card, the card holder backs the card with a cash deposit. The deposit is the collateral on the account. And this gives the card issuer, which is probably your bank or credit union, security in case the payments aren't made. You can do the same with a secure loan, which we actually did this with our son. We were buying a used car and we had the money for the car in a savings account. So instead of paying for the car outright, we took out a loan in my son's name that was secured with the money in the savings account. And the loan it's a very low monthly payment over 3 years. So it's something he can easily manage in his budget. And this should establish a nice credit score for him when he pays the loan off. It's important to explain to your teens that you go into a loan with good faith that you will repay it. And for the most part, that's exactly what happens. The bank or credit union or business that's loaning the money does it with a certain amount of risk. This is why a credit score is important. The lender measures the risk that they're willing to take largely based on that credit score. So a good risk equals a lower interest rate on the loan. A higher risk equals a higher interest rate on the loan. The reality is things happen, life happens, and sometimes a loan doesn't get repaid. but the goal is to fulfill that obligation. And your teen understanding that when you don't pay that loan back or you don't show responsibility with the loan, then that habit or behavior can actually follow them as they become an adult. Establishing a relationship with a bank or credit union can actually help you in this process. It gives you someone to work with that can offer you suggestions and options that maybe can help you sort of navigate this path. Another thing to remember, having money in a checking or savings account that's in good standing at that bank or credit union, also being able to show steady employment, those are things that'll also be considered by a lender. So those things could be helpful along with the credit score. Keep in mind, if your child needs a car or an apartment or something like that before they've been able to build their credit in a way that they want it, another thing they could consider is having someone co-sign their loan, or in the case of an apartment, their lease. That co-signer is most likely going to be a parent or a close family friend, maybe just a close friend. But that person needs to understand that when they sign that loan, it's a pledge to pay back the loan if your teen doesn't. So they want that to be someone with established and good credit as a cosigner. This is a big responsibility to that person, and it really shouldn't be taken lightly. So make sure you have a conversation and you're in agreement on the terms of the loan before you move forward on that. Once your teen has established credit and their credit score, encourage them to maintain it. Share with them the 5 things that make up a credit score so they know what their goal is. 1, payment history. This is paying your bills on time, and it is actually a big part of your credit score, so very important that you maintain those payments. 2nd is your available credit. This is basically the amount of credit you've been approved for, and a really easy way to look at that is actually with credit cards. Let's say you have 3 cards and each of them has a $10,000 limit. Then that means you have $30,000 in available credit. And one thing a lender will look at is how much of that credit are you actually using. Number 3, the length of credit, which I guess is pretty obvious, how long you've had credit. Number 4 is new credit. And this is applying for new things like loans or credit cards, because those all actually show up on a credit report. And if you've had a lot of them recently, a lender will wonder why. So that may be something you need to talk about or explain if you're getting a loan. Number 5 is credit mix or types. Basically, a lender wants to see different types of credit. Remember the ones we talked about before? It's revolving credit or credit card, installment credit, or maybe a car note, and then maybe service credit like with a cell phone or something like that. But that shows your responsibility with your credit. One thing I want to make sure you hear today is don't let your teen get discouraged with this. It takes time to establish credit, and it's going to change as they grow and as their life changes. They're going to add the type of credit that they use. Obviously, the length of time they've had credit will grow. Making those payments on time is a really important part of their credit score. And over time, there's going to be a history of that. So just remember, establishing their credit, then maintaining it or making it better is the goal. Also remind them to consider all their options before using credit. Make sure they understand the terms of that credit agreement before they sign on the line. The last thing I want to talk about is helping your teens understand what having a job really means. There can be hidden costs of working, but there can also be some great benefits that even though they may feel they're too young for, they could really be helpful for them. Some of the hidden costs kids may not think about are things like getting back and forth to work. If they have to purchase clothes or uniforms before they start working, sometimes they may need a certain color pants or a certain type of shoe, or even shoes that make their feet feel better after they've been standing all day. Some jobs may require certain licenses or education. There are also some that have union or professional organizations that they're affiliated with. There may be dues or a fee to join those. Now, some of that may come with higher positions, not so much entry level, but those are things to keep in mind because they may be goals that they want to work toward. Some jobs may even require that you bring your own tools or equipment. There are also teens that are parents and they need to consider childcare costs as they move to full-time employment. So as your child considers a position, the pay rate and any benefits offered should really be carefully considered before they make a decision. See how everything fits and see if it works for them and their situation. I actually had some friends once that had to consider their income against their expenses for their jobs and what worked for them. The husband was the main source of income and they had 2 children. And the truth was, when the wife worked, they actually lost money. It cost so much in childcare that it was cheaper for her to stay home and take care of the kids and then look for maybe a work from home job rather than actually going to an office. So they sat down, they figured it out, they adjusted what they needed to make things work for them, because sometimes things just aren't a good fit. With gas prices as they are currently, an $8 an hour job just may not be worth it if the commute's going to cost excessive amounts of gas. They may need to find a job that's closer to home. You may also want to go over a pay stub from a job with them to help them understand it. $8 an hour won't be what they bring home. It's probably going to be more like $6.50 an hour once all their deductions come out. I remember my son's first paycheck. He wanted to know where all his money was. It's quite a harsh reality, realizing how much you give up out of your paycheck, especially when it's for things you can't control. So maybe make sure they understand the deductions that are taken out of their check, the federal and state taxes and Social Security contributions. Some people may even have things like wage garnishments for a judgment or child support if you have that situation. And that could happen even on a first job. Most other things coming out of their check would be voluntary. For instance, a 401k contribution or paying for health care or any other job-related expenses. Sometimes travel or uniforms or something like that might be taken out of their check. Those all are going to depend on the job and the employer. They're just going to need to ask about anything that they don't understand. Even though the deductions they see from that first paycheck can be a bit of a shock, I would encourage them to participate in things like a 401k or even insurance if it's offered. I think kids don't really get a picture of how starting early on retirement can add up to big savings when they're ready to leave their jobs. Even saving $100 a month beginning at age 25, say, should give them over $1 million by retirement age. But that can be hard for them to believe. So show them those numbers and let them see what it can really look like. Also show them that if they start early, it's easier to continue. You never really see that money that goes into a 401k. Even keeping it up when you change jobs can be a great habit. It's kind of a out of sight, out of mind thing. If you never really see it, then you don't really miss it. It's hard. People think, I have time, then suddenly they just don't. So start early if they can. As for insurance, your teen may still be on your insurance, but if they had another policy, it could be used as supplemental coverage, and that can actually go a long way with a big medical expense. So it's just something to consider if it's an option, especially if the employer is paying for it. I would also explain the value of benefits of a job, paid leave, insurance paid by an employer, a savings plan. These are such great values. I've heard kids say, well, it's not like I make that money in my pocket. Maybe not, but being able to take off work when you need and get paid for it is huge. Imagine being able to take off for a trip or have to take off a day because you're sick. If they're offered vacation or sick leave, then they aren't losing pay when they need to take that day off. I'll be honest, this may have more weight once they're out on their own and really responsible for their rent and their expenses. It will make a lot more sense to them when they're paying all their own bills and something like that happens. But hopefully they can see that value before as well. So I would go over it with them. If a company offers things like employee tuition assistance or any kind of training, those are great, and those will only help them grow, not only in that position or with that company, but maybe even for future positions. I mean, learning something new is always helpful. Even employee discounts or wellness programs can offer them savings. So I would go over some of these things, just help them see the value of this as they start to weigh their options when they're job hunting and planning their future. I have one bonus tip for you for their first job. Remember the first time you filled out a W-4? Y'all, I had to call my mom. I had no idea what to put for the tax deductions. So maybe give them a little advance notice that this was going to happen and let them know what to put. Let them know if they're claiming themselves or not. I'm guessing probably not, especially if they live at home, so that would probably be a 0. But if they've moved out already and you aren't claiming them, just let them know that and what they need to put there. Otherwise, I would expect a text when they get to their new job and start doing their paperwork. Maybe multiple texts, so just be ready. We know it's easy to get overwhelmed when you think about all you want to teach your children. Now imagine how they feel. Most of them recognize that there's so much they don't know yet, and they're trying to prepare to go out in the world on their own. The good thing is, questions can always be asked, and things will continue to be learned as life develops and needs are created. Most likely, it's not like they're leaving and can never ask you something again or speak to someone when they have questions. I mean, I'm well into adulthood, and we still call the parents, even though we are the parents. As we said in the last episode, talking with your kids in an open and honest way is the best action you can take. Be willing to listen to their questions and then help them get answers that they need. Don't forget to give you and your kids some grace. None of this will happen overnight, and some of these things are not that easy to navigate. So give it time and know there are people out there that can help you as parents and help your kids. Reach out to your bank, your credit union, reach out to local organizations that offer this kind of help. That's what we're all here for. So we're here and we're ready to help. Okay, you guys, before we go, join us for our employee spotlight segment where you guys get to know our First Pioneers family. And today I have Ben joining me. Welcome, Ben.
What's up, everybody?
Thanks for being here. We're so excited. So, why don't you start with introducing yourself to our listeners?
Sure. My name is Ben Dubuque. I am a loan officer here at First Pioneers. I've been here for around 4 years now. So I actually started as a part-time teller, and now I'm kind of working my way up. Now I'm on the lending side. I do other things with the credit union as well. As far as on the chapter level, I am in the Young Professionals Network with the Lafayette chapter. I'm the candy man, so I am the QLAC representative for the Lafayette chapter. So I deliver all the candy to everybody. So yeah, that's kind of what I've been doing at the credit union.
That's awesome. And we're so glad you're here.
Yes, ma'am.
So, let's start with your questions. So, how do you define success?
Um, so I'm gonna talk about the success on like the credit union level. One thing that I appreciate here that I really like is that it's not like an individual awards thing that you see at the credit union level. It's the amount of people that you affect. So my favorite part on the lending side is getting somebody in that core that they want. It's getting somebody in their new home, their first home. So success, kind of what I define it as is the amount of people that we get to reach, the amount of people that we're changing their lives. So that's something that's really special to me.
That's a great thing that we get to do, isn't it?
It is. It truly is.
Okay, so next question. What's one thing people don't know about you?
Um, one thing I'm gonna keep it with the credit unions. One thing people may not know about me is my wife also works for a credit union. She is works for the University Credit Union in Lafayette as well. So that is something that we kind of get to share. She actually got me into the credit union. I was kind of at a point where I wasn't really sure what I wanted to do with my career. She's like, "Hey, First Pioneers is hiring. Let's see if they have anything open." So that's kind of how I got started. So that's one thing that people may not know, which is pretty cool.
Yeah, that is cool. We're always grateful to her for bringing it
Yes.
to us. All right. And last but not least, what are your hobbies?
Oh, I have a lot. So I love any type of sport. Doesn't matter what it is. Especially on the weekends, I play golf. I play pitch softball on the weekends. I am involved with other organizations outside of the credit union. So I'm big into the church or local church. I'm in the Knights of Columbus with the St. Basil Knights of Columbus. I am part of our church finance council. So that kind of ties a little bit hand in hand what we're doing here at the credit union. So I do a lot of things outside of the credit union, which is pretty cool too.
Wow, you are very busy.
It's truly like super spread thin. And then we have a 2-year-old as well. I have a 2-year-old named Jack. So we are definitely spread thin at the Dubuque household.
Well, we're glad to have you though, and we appreciate everything you do here at the credit union and in the community.
Yes,
So,
ma'am.
all right. Thank you so much for being here today. We've really enjoyed visiting with you. And
Yes,
for
ma'am.
everyone out there, join us next time for our next spotlight.
Thank you, Heather.
Thank you so much for joining us today. You've just watched our YouTube version of our Money Tips No One Told You podcast. There is also a blog version on our website at firstpioneers.com. You can always find us at any of our branches in Lafayette or New Iberia, Louisiana, on our website or on any of our socials. We're here to help you in any way that we can, and we really appreciate you watching. See you next time.